Mavericks, this is Rob Reinhold. I'm joined by Mr. Darren Fisher, and here we are the week after Thanksgiving. At Maverick, we always take the week of Thanksgiving off and give all of our staff the week off, so it's nice to be back talking with you as we didn't have a trading room last week. Let's get into what happened this week, because this week was a big week. Now, let me go back through what happened the week before. We had that big jump. This week, we got a market that churned higher. It was an ugly kind of churn. So on Monday, we had a big down day. Tuesday was down. Wednesday was down until we got Chairman Powell speaks. And all of a sudden, the market jumps up. And then on Friday, we had a big gap down, and it recovered pretty much all of the gap down. So it was a messy, choppy week, but the overall trend was higher. And not only higher, but we are now trading above a 200-day moving average. Now, we're going to take a look at a chart. And actually, let's do that right now, because I want to show you where we are in this market before we get into a daily chart and really talk about next week's action. Here we have the last few weeks of the S&P 500. Now, what I want to do here is I want to blow this out to where we get a big picture of what's been going on. Let's go back to the entire year. And I want to go ahead and draw a trend line here. And I want you to see where we are. Look at that. Every time we have reached this trend line, we reached it in March, we reached it in August. That was the top of this bear rally. And then we fell down to new lows. We fell down to new lows. Here we are. We have climbed all the way back up to this point. We're right here. What is going to happen? So before we get into my take on what's going to happen, Darren's take on what's going to happen, I just want to be very clear that we have to recognize where we are in the longer term pattern. We're going to get into the daily chart, into the what's happened in the last few candles. But all of that is going to be with the premise that we are at some very, very major levels. And if we close above this line, it could spur a movement to where people want to get more bullish. It could even spur potentially year-end performance chasing, which I didn't think would happen, but it actually might lead to an end-of-year rally. If we close above this line, Darren, do you see people maybe running into the market for the last couple of weeks of the year?
I honestly don't think they're going to chase it. I think that there's too much riding on. I just need to outperform a very poor performing market, and then I'll be safe for the year. I might not get a huge bonus, but I'll have a job for the next year. And I think if you get one or two candles above this long-term trend line, and you do suck a few people in, I think that sets us up for an end-of-year head fake more than anything else. That's just my personal opinion.
This is always a question when we are at these moments, and I put this as like we're on the edge of a cliff, where either this market is going to actually break out and make all the people who are still bearish really question why they're still bearish and put them in some pain. Or it's going to be the turning point where it's just a bear rally. It's just a bear rally and it fell back down. One thing to think about is that the next major thing on the calendar is the CPI report, which is on the 13th of December. So next Tuesday. That might be the thing that actually causes the big move one way or the other. I could easily see us hang out up in this area until that comes out. One thing you really need to watch is the US dollar and the 10-year, because that is what is moving this market. The US dollar sold off hard this week. It sold off hard the week before. The US dollar's been selling off for the last 6 weeks. Basically the exact same amount of time that we've been rallying off the low. And this whole time, the 10-year bond has gone from 4.2 all the way down to 3.5. This is what's actually leading the market. If the dollar and the 10-year bond keep moving lower, this market will go higher because it is being pulled around by this. So we talked about that Powell came out on Wednesday and said, hey, we might be slowing the pace of rate hikes in the future. Let's take a look at what happened on the economic calendar. And you're going to see that all of the leading indicators. So if we take a look, we see that ISM on Thursday came out as weak. We also got the PCE price index came out as weak. And we had things like, pending home sales, preliminary GDP, all of these things, they came out and it didn't really show a great picture of the economy. Then on Friday, we get this number. We've been talking about this for the last 6 months, that good news is bad news and bad news is good news. And we got a good employment report, better than expected. And the market tanked. The market actually gapped down about 2% on the NASDAQ, 1.5% on the S&P. And everyone said, hey, oh, that's it. That's it. Everyone was hoping for more dovishness from Powell and the Fed, and this report is definitely not going to do it. By the end of the day, the market had shaken it all off, and we were back up to almost neutral for the day. So if we break down the markets here, let's take a look at the weekly performance here. On the week, the Dow was positive just a little bit, but the S&P was up over 1%. Q is up 2%. And you can see that we had just a general overall strong week, but it was choppy to get there. But by the end of the week, it was still more buyers and sellers. Take a look at what is happening in commodities. Oil, gold, silver are really rocketing higher, and this is directly because of the weakness in the US dollar. If the US dollar continues to weaken, gold, silver, commodities, they are going to keep going high. Oil isn't all that correlated to the US dollar, so I think oil is its own special thing. But everything else commodity-wise, you will see the price of those start to move higher if we see lower prices in the dollar. We already took a look at a longer-term view of the S&P. We already know we're trading right up at this downtrend line. We said there was going to be resistance at this 410 a couple weeks ago. So here we are. We're here. We gapped down, and we recovered pretty much all of it. Here's the question. Can we break out and run through this major resistance level before we get the CPI? I think the market is going to be a little bit tentative to actually make a big bet going ahead of that CPI. That being said, there is way more strength and weakness. I could easily see us just hang out here, maybe poke our head a little bit higher than 410. But I don't think we have enough juice and gas, and people have enough courage to really make us run this week. What do you think, Darren?
Yeah, I mean, you can make the case for that, Rob, and I could completely see it. Do we poke our heads above? This 410 level is a major resistance level right here. I mean, this goes back several months. I mean, you can see where it goes. It's one of these things where, like I said earlier, I mean, do we have the juice to get above it, stay above it, and have that long-term downtrend line now become support instead of resistance? Or is it going to be a game of whack-a-mole? Go ahead, put your head up there a little bit, and then the market smacks you down. We're at an inflection point, I think is probably the best way to put it for what the market does. And I mean, this is going to sound, 6 of one, half dozen another. It's going to sound kind of like a chicken call. But at this point, I don't necessarily really want to put any more capital to work for the rest of the year, just because of the possibility of if we poke our heads above, we get slapped down, and there's too much strength in the market right now for me to say I'm going to short this inflection point right here. So I think discretion is the better part of valor. We've had a great year all year long, and I personally don't see any reason to be ashamed of wanting to sit out the rest of the year.
All right. Yeah, no, I'll agree with that. But you do have to admit there is more strength and weakness right now. Right now in the market, that could always change. We know that can change, but the current trend is to the upside. Now, that is on the spiders. Let's jump over to the NASDAQ, because this isn't the same story. I mean, we are trading up at this resistance level on the spiders. We're a mile away from this. And we had this really nice uptrend on the S&P, and we've got this really lazy, boring uptrend that's hardly going anywhere. So I think if we were looking just at the S&P, I think you have to say, oh, wow, this is much more bullish than people expect. But then we come over here to the NASDAQ, and it's like, you know what, this is still bullish. You can't say that it's bearish. We have rising 20 MA. We've got a 20 MA crossing above the 50. So everything on it is bullish, but it's just not as bullish. So this is why it's telling me that we're probably still don't have the juice to break out and make a big run. And like I said, until we get through the December CPI, I don't see this market running anywhere. Now, if that December CPI comes out really positive for the market, then we could run. But until then, I think we are at a 0 to a +1 to the upside. Here's the VIX. You can see volatility is just cratering, just like it did back in July, and we got all the way down to 20 in July. So if we take a look at this week's events, I've got the markets are likely to continue to inch higher. There is more strength and weakness, and there's nothing right here, right now, that is going to scare people out of the market. The US dollar and interest rates are moving the markets. So this week, if the dollar strengthens and yields go back up, this market's going down, period. That's all there is to it. The markets are being led around by the dollar and interest rates. I personally think we're going to see some sideways to slightly bullish action until the CPI next week. On the calendar this week, there's not a whole lot ISM services on Monday, and then we do get the PPI on Friday. PPI is supposed to come in at 0.2. Last month, this was much less than expected. Remember, a higher print is going to scare the market. A lower print is going to encourage the market. But this is 2 days before the CPI. I don't think you can really say with definitive action that a good or a weak PPI is going to make any difference to the market. People want to see the CPI. That's what the Fed is looking at. That's what the market's looking at. So the PPI will move somewhat, but until the CPI is done, I think you really have a hard time making a month or two outlook on the market. So here we are. We've been at a +2 in the market for the last 2, 3, 4 weeks, and it's been a good call in the markets. We got a +1 for the week, so we think there's a little bit of bullishness still out there, but that's really it for the week. Anything to add to this outlook, Darren, before we get into sectors?
No, I mean, the sectors have changed around. We're going to take a look at that as well. I think we're on the same sheet of music. We've got, that we are bullish. Don't get me wrong. I'm not going to go out today and say, yes, absolutely, this is an inflection point and short it and short it hard. You can't do that. I mean, it's irresponsible and it's just not worth doing right now. It's the big question: do we have the gas in the tank to break above that long-term trend line and continue on? I mean, that's the question that everybody's looking at. I think next week is going to be pretty light volume, and I think you're right. We've got to wait till the Tuesday after on the 13th and wait to see what happens then. I think that's going to be the key. But then we're coming in. That's going to be the last real trading week before people pack up for Christmas. So if you do get performance chasing, it's going to be all in that 1 week, and because there's not going to be a lot of volume the next week. You'll be between Christmas and New Year's. You're not really going to have a lot of volume there too. It might set us up for a good January, but I just don't see, there's just not enough time to capitalize on a good print on that CPI and establish good positions to bring you into the last of the year, for that performance chasing. So that's where I'm coming from on that. We can see here, let's take a look at the individual sectors. Communication services, I've beaten communication services for about the past year. I got to give it kudos this week. It came in, it was with the top performer right there at 3.5%. A consumer, again, that's been a beat down sector just in the last 6 months or so. This came in, really nice at 2 1/3. Everything else, healthcare has been strong. You can see it. Industrials have been strong. I mean, they were both good right there. The one thing that kind of surprised me, because the past month or so, it's been industrials, healthcare, and financials that have been leading this rally. Financials didn't really do a lot right there. I mean, they were one of two negative sectors right there. Now, they were only down 0.5%. That's not a whole lot, but you can see the relative strength in financials is slowly seeping out and going into other areas. And you see energy. We've run the register on energy. I don't know how many times. It was down 1.7%. I mean, I really think energy is going to base here for a long time. I don't see any impetus for it to drastically go down, but I think the easy money has been made in energy, and we just need to look for other sectors in the coming year. So let's take a look at them individually here. Get utilities. I mean, technically, I've got to be at a +2 here, and we were at a +1 the 2 weeks ago right now. This is looking good. You're above the 20, you're above the 50. Might be in the middle, might be the beginning of a bull pullback right there. But you can see, we on Thursday, we gave up, we gapped up, gave it all back, closed basically flat there. And then we did gap down, and utilities wasn't as strong as a lot of other things were, as the broad market is. So I'm still bullish on utilities. I just want to wait and see if we get the bull pullback or if it bases here. That's the thing. But utilities is looking really good. Communication services actually at a +1. That up 3.5%. Firmly got it above the 50. We're a little bit of a resistance right there from back a couple of months ago. But if we can break above that, I think it's clear sailing. I think so many things have been beaten down in communication services that to the value investors, which we are not, but to the value investors, they're looking at it and saying some of these things are trading near or at book value, in which case it's worth it for them to bet on it. And we're just going to ride their coattails. We'll see if they can break through that resistance. But, you can't be at a -2, -3 in communication services anymore. That market is done. It's a new market right here. Cautiously bullish on communication services. Real estate's another one that looks pretty much like utilities does. We're at a +2, and I think you called it right, Rob. It's the 10-year and and the bond prices are and the dollar are what is driving this market. It is the tail wagging the dog. And you can see both utilities and real estate are very interest rate sensitive. So, this is basically a mirror chart. Let's wait for the bull pullback to happen. But technically, you have to be at a +2 on real estate right now. Looking at industrials, at a +3. We broke through August high right there and did it on good volume, good price action right here. And look at Friday's candle, huge gap down. And it closed up almost 0.2% right there. So it's a huge range right there on Friday. There's a lot of strength in industrials, and it has been. It's been leading the market for a couple of months right now. It's one of the best looking sectors out there as well. One that looks just like it is healthcare, which is coming up right here. Another +3. This broke to the upside decidedly. You probably could have gone a +3. Now, 2 weeks ago, it would have been a little too early. We were at a +2 right there. But you can see we decisively broke to the upside, and what was resistance now became support. We're up there. Everything's looking really good. So you're going to see that industrials and healthcare are the two best performing sectors out there. If you're looking for bulls, I think these carry through to the end of the year and into the next year as well. Financials, you're going to see it was up with the cool kids the last couple of weeks. Just did not have the juice to keep that +3. The momentum just isn't there right now. We're kind of we briefly broke through August highs, but then we're back down there. I still think that give me another week for financials to prove that we're not at resistance anymore, and I'd be happy to promote it to a +3. This just doesn't have the same enthusiasm, the same juice that industrials and healthcare does. That could change. I'm still bullish. It's just not as bullish as I was a couple of weeks ago. Consumer, this one, we're above the 50, so I'm going to give it a +1. We're just kind of in this base right now. Can we get through the resistance part of that base and hold it? We'll see. The line in the sand for us is that 50-period moving average. We finally got above it right there, and so I think you've got to be just technically slightly bullish on consumer right there. Tech is another one, slightly bullish. It hasn't had the velocity. We're still, we've got to go from 135 all the way up to 150 to break through to any new clear ground right there. And that's a huge move for an entire sector to do. So I am slightly bullish. I think we base to inch our way up. That's about as much as I'd expect out of tech right now. And we'll wait and see where it goes. Onto basic materials. This is looking really good. I'm at a +2 on basic materials again. We broke through those August highs. We're looking pretty good. As soon as you give me a little more slope on that 50-period moving average, be happy to go. And we break through that probably looks like the June high right there. yeah, I'm quite happy to go to a +3. So I think we crawl at a much faster pace than some other sectors to get up there, but materials is looking really good. And on energy, I had to create a new type of rating for this one. So we're to 0+ on energy right now. You can see we've been basing for about a month right there. And, I'm not bearish on it. But I'm not bullish enough to say it's at a +1. So the new term right now at a 0+, call it a half. I think we hold up here. There's going to have to be, some sort of, good news event, I think, or just a change in consumption to push us up and get us back into the +1, +2, +3 territory again for energy. So you can see energy, we've got it at 0, slightly bullish, communication services, consumer and tech, real estate, materials, financials, and utilities all to +2, but healthcare and industrials are leading the way at the +3 right now. So let's take a look at some potential trades. Looking at utilities, last week in utilities, we were had a diagonal call spread, I guess from 2 weeks ago on OGE. And this one was a near max gain. I think we were short the 40 calls that expired on Friday right there. So at a near max gain, if you're still holding the long calls, that's good. If you got rid of the whole position, just take it for what it's worth. It looks pretty good. Might be basing right here. Might be in a little bit of a bull pullback. Take a look at Monday's market action if you slow out those long calls and make your decision about whether you want to wait through it or just exit the whole position with a nice gain and move on. This week, we're looking at center point energy. We're sideways to bullish on this one. We're going to be looking at the December 16th, 29, 31, 33 butterfly right there. So we get in there, it's sitting right at 30.67, as near to 31 as you can probably get. And then we're going to go up there up to the 33. It just has to stay between probably about 29.50 and 32.50. And that's going to be our profit area right there, which the way this is going, just very slightly bullish right there. I think this is a good trade to do and keep it on for a week or for a couple of weeks. In communication services, we've got a bear call on Twilio, and that expires next week on the 9th. Now we're below 50 right now. That was a 50-55 bear call spread. So this is looking pretty good. Just monitor this position. It's got a week left till expiration. If it gets much above 50, I would probably want to take a look at getting rid of it, especially if by chance we have a very strong market next week. I don't think that's going to be the case. We're just going to be slightly up. But if we do get a strong market, just watch this position. I mean, it's looking really good right now. Just give it that last week, and you're going to work. This one looks like it wants to come in on a max gain. Looking right now at Vodafone, nice little bear rally at Vodafone right there. So we've got some support right there, and we came up there, could not really get any type of new. I mean, that's a really weak swing high right there. So there's a couple things you can do. Go out to January and take those 13 puts right there, and then short those 11s. That's your major support right there. Short those 11 puts against it for December 16th. And I think you've got a pretty good trade. So all we need to do in the next 2 weeks is to have this drift down right to that 11 area and then reevaluate. So you've got a lot of delta in those 13s, though. That's one thing to take a look at. Just the way they're pretty deep in the money, which is going to be fine. That means they're going to move faster than something that's closer to the money. But just keep an eye on those. If it does catch a bid, size yourself for max loss on that. Healthcare. Last 2 weeks ago, we had a butterfly on Moderna, and it was a 170, 180, 190 butterfly, and it closed today at 182. So that's pretty close to a max gain on that butterfly right there. If you held it into the close today, you pat yourself on the back. You're probably looking at $8 gain on something you got into for about $250. I mean, that's a good trade no matter how you look at it. So that was one we're pretty happy with right there. Looking at Intuitive Surgical right now. This is a high base. It's showing signs that it wants to break out. On Wednesday, it kind of broke out right there, and went up higher Thursday. A little bit of a pullback on on Friday right there, but still, nice looking candle, gap down, and then try to, claw through the rest of the day. Really good strength right now. So how are we going to do this? Probably going to go long those December 250s or 260s, and then short, this next week's 270, 280. Okay, I'm going to redo this. All right, 270, 280 bull call. All right, let's do this again. All right, so how do we want to play this right now? I think the best way to play this is just a straight 270, 280 bull call spread. It's been a bread and butter play. You got defined risk, defined reward. I mean, you're sitting at 272. So if you get into this trade, for $4, you've got $6 in upside right there. And I think it's a good trade. You're in this about 3 weeks to go until expiration. With the strength that this intuitive surgical has shown, I think it gets up there. I mean, this is a good trade that I would be taking a look at. I want to see the action, see if we can break through Friday's high on Monday. If it is, that's my green light. That is my higher high that I'm looking for, and be more than happy to get that trade at that point.
Darren, I think this trade looks great, and this stock always cracks me up because years ago I was doing a trading room, and we used to do our trading rooms all live for 15 years before we went to a recording, and I kept calling it interactive surgical. And one of our traders got on and said, "Rob, of all the things you don't want to be interactive, it's surgery." And I thought to myself, oh my gosh, am I calling it interactive surgery? And so again, it's funny when every time I see this stock, it makes me laugh because I think of that. Interactive surgery. All right, in industrials, we had a 65-68 diagonal call spread on JCI, Johnson Controls, and this is like perfect. I mean, our max gain point was 68, and we closed at literally 68.12. So again, you could close it out for max gain, or if you still like the trade, I still like the trade, you can ride that long call for a little bit longer, but this trade just worked out absolutely perfectly. This is one of the trades we've really liked lately is diagonal call spreads. When something is run up and basing, it's a really nice trade because you get a little bit of delta and a little bit of positive theta. So if it doesn't go anywhere, you win. If it runs up, you win. As long as it doesn't fall is really all you need to be profitable on this trade. You're going to see that we're actually still doing a lot of these out there. Here we are on Caterpillar, and oh, look at what we have here. A diagonal call spread. So we're really talking about the same thing here. We've got a stock that is consolidating and basing right up here at 240. That's the resistance level. Now look, this thing could break out and run this week, or it could continue to go sideways. Well, we can capitalize on both of those by using the diagonal call spread. So go out to December 23rd, go to the 230 calls, and then you're going to sell this Friday's 240s against it. So it's going to be a short-term diagonal. And if it goes sideways, you win. If it goes up, you win. It's a win as long as it doesn't go down below its break-even point, which on this trade is probably going to be somewhere around 231, 232. So again, this is the kind of trading you want to do in these markets where it's not a rip-roaring bull market, but it's strong. These are the kind of trades you want to start working in to your mix. Moving on to financials. Last week we had a bull call spread on APO. Sorry, I keep saying last week, but 2 weeks ago. So this is just a perfect trade. 60-65. That was our trade. 60 to 65. We had a bull pullback, and you can see this thing ripped higher, and this is a max gainer. So nice job on Apollo Group. This week, Charles Schwab. And oh, looky there, another diagonal call spread. We broke out. We've been holding this resistance line here at 80. The question is, how far is this going to go? We're not in this really strong bull market, so we can easily just say, hey, let's go in and do a diagonal call spread, 80 to 85. So we go the 80, 85. If it just hangs out in here, this is a win. This is a win. Everything above this point is a win. We just don't want it to fall substantially. So whenever you see a stock that's strong, but it's like, hey, I don't have the confidence that it's going to move from 80 to 90, well, then just throw on a diagonal call spread. Bring in some positive delta, bring in some positive theta. You'll be happy as long as it stays in this 82 area. Just perfectly fine. So that is Schwab in the financial sector.
Yeah, in consumer last week, we had a butterfly on Harley Davidson, HOG. And I can remember trading this, several times over the years. So this was a 50 butterfly. Okay, so a pretty narrow butterfly right there. We closed at 47.65. We can't ask for anything better than that. I mean, so you pulled out, probably close to 235 on a potential, $2.50 gain right there. I mean, so we've really been having good luck with a lot of these butterflies.
Hey, Darren, before you move on, I want to tell a quick story about. So I've done a lot of butterflies in my life. It's one of my favorite trades, and only once has the butterfly landed literally to the penny on the middle of the strike. So this trade here was, 47.50 was the max gain point. And I actually had a stock that once closed exactly this point, but I realized that's kind of the worst thing that could have happened, because usually, like, if the stock was at like 47.65, then I know, okay, I've got to close one of the short calls, and that's fine. Or if it's below, 47.40, okay, I only have to close one side of the trade. But when it's right here, right in the middle, I actually was forced to close both legs of the trade, and you'll never get like the max gain on a butterfly. So 47.65, Darren, you killed it on this one. I mean, this is about as close as you can get. Once in my career, I've had it be dead set right on that point, but I realized it wasn't as cool as I thought it'd be because I had to cover both legs. I just want to share that quick story.
I had something similar happen to me. I think I was on Expedia several years ago. And this is, for people that haven't traded a lot of butterflies before, this exact situation here is called pin risk. And it was one of those things. It was just vacillating right on that short strike. And I mean, which side do you close? And, in the end, I didn't get my order in time. And I ended up, I actually had to call Corey that afternoon and say, hey, don't freak out, but I am long $200,000 in Expedia right now, and I'm going to liquidate that and going to end up liquidating that on Monday. So it's one of those things where it's great that you got the max gain on the option itself, but it is not a good situation if you're pinned to actually having to take the underline or short the underline. Not a good position to be in. But yeah, we're really happy with the way these butterflies are turning out. So we're looking at ChargePoint Holdings right now in consumer right now, and this is one that has kind of been looking weak. And even though we're at a plus one on consumer, there's a lot of stuff out there that hasn't yet recovered. So you can see, we're just going to do a really short trade. We can go out to December, the 16th, and just do an 11-12 bear call spread right there. I mean, you're right about in the middle right here. I mean, if you can get this for 50 cents, it becomes a pretty much a combination theta delta play right now. But I mean, this is great. This is one of those ones that's looking weak. If you don't get the delta on it, you're going to get the theta. If you do get the delta, you're also going to get the theta. The only thing that could go wrong is if this thing catches a 36 cents bid, and that's going to be probably your 45, 50 cents going to be your max risk. It goes up to 12. This thing's, give this trade 2 weeks. It looks like it just wants to go drift down to that 11 area. So, this is one that, that I like right now. In technology, last time we had a bear call on DocuSign right there. So we had a 45.47 bear call on it. It closed at 46.60. So we probably took a small loss, on this one. And look, I would get nervous if every one of our trades was looking good, that it lulls you into a sense of security if every one of your trades goes well. So it's good to, I think, have a small loss on it, because you know what? All the other trades that we've had have been looking really good. you don't obsess over a small loss on something like this. Even if we'd taken a max loss on it, I really wouldn't care. That's the beauty of basket trading right there. So small loss on DocuSign. Now we're looking at the other side of the bell curve right now, and we're looking at Dell. This thing's in a high base, broke through. It continues to base again. This is one of those ones, where do we think it's going to go? And hello, let's bring out that diagonal call spread again. So we're going to go out to December 23rd. We're going to go long those 42s, and we're going to short the 45s against it. Here's resistance right here. Give this trade a week to go. You've got 3 weeks total to see where it goes if you want to hold those calls. All we need this thing to do, just hold up right at that, between 44.50 and 45, and that's going to be a nice trade for us. So, well, I mean, you and I have been trading for quite a while, Rob. You remember when all we had was monthly expirations. To do something like this, we would have to be looking at a January, December diagonal spread. I think weekly expirations and dollar strikes are probably the two best things that ever happened to the options market, because 20 years ago, we wouldn't have been able to do this trade.
That's so true, Darren. And I remember, so I really love, we call these mini diagonals. They're very, very short-term diagonals. There was 1 week a month I could do them. So the week before options expiration, I could do a next month this week. And I loved that week. That was one of my favorite weeks of trading, but then you had to wait until the next monthly options expiration week before you could do it again. I love the weeklies that you can do this all the time now. Last time we met, we had a butterfly on BHP Billiton, and the other butterflies we had were very well tamed. They just hung out there. This one did not get the memo. This one took out, so this one was a max loss on a butterfly. So take the loss, move on. This week, we've got Anglo Gold Ashanti. So here we have a stock that, same thing, is based up here at these levels. I love these last two candles. Maybe today was a down day, but it was a green candle. You basically get to choose how you want to play this. If you want to play it directionally, maybe the December 1820 bull call spread. I'm liking this 1719 diagonal call spread. As you can see here, just slightly bullish here. So we're getting positive theta. So if it doesn't go anywhere, we're fine. If it does go somewhere, we're fine as well. These diagonal spreads are really good in these markets that are showing strength, but they're not showing they're going to take off and run. If you want to be a little bit more directional, maybe an 1820 vertical spread makes some sense. And let's take a look at energy. Energy, we had another butterfly on Pioneer Development PXD. And the midpoint was 250. So this one was a pretty wide one. This one was a 230, 250, 270. Now it didn't close in the middle like we got on Harley Davidson, but we closed within our profit area. So this one's going to be a small gain. So take the gain, move on, and go to the next one. This week, I'm looking at Vermilion Energy. Most of the stocks in the energy sector are in more of a sideways trend right now. This one has been weakening, and it's been weakening well before the energy sector started to weaken. We got a nice engulfing candle here. So I'm looking at a 1820 bear call spread. It's going to last us for 2 weeks. So just looking for 1820. Right here, we're going to get about $1.10, $1.15 in the credit. We're going to have about 85 cents of risk, and we'll just play this for 2 weeks. If it takes off and runs above 20, okay, max loss. If it falls down below 18, okay, max gain. Anything in between will be a small gain, small loss. That is it for our trades. If you have any trades you want to share, go on to our forum in the Maverick Trading members area, and let's get a lot of discussion with our traders to help everyone out. To wrap this up, these markets are at a critical level. We are right at this point, and I'm more bullish, but I do realize that next Tuesday we have a very, very important announcement coming up, and I'm not willing to stick my neck out. And I think a lot of other people are feeling a lot like me, like, hey, I'm very bullish. The market's showing some good price action, but we're right at these very key levels. Plus, we got this CPI. I don't think people are going to be sticking their neck out all that much over this next week. I see next week to be a fairly boring week, and then the real action comes the week after. We've been having this up for, Darren, how many months have we had tech to underperform up? I mean, the whole year possibly?
No, probably 5 or 6 months though. Yeah, it's been up there for a while.
we still think it's going to underperform. However, one of the reasons why we believe it's going to underperform was because of yields. When yields are high, it's not good for tech. If those yields start to come down, then tech is going to start doing a lot better. So we're going to keep an eye on that. And at some point, we might actually say, hey, you know what? Yields have come down so much, we think tech might actually outperform here. We're not there yet, but the underperformance of tech is starting to look like it may be waning a little bit. I'm definitely not bullish tech yet, but I'm getting closer to being able to say that. Other than that, everyone have a great week and happy trading, everyone. Goodbye.
Good trading, everyone.